Hi traders, it's Zoran Kresovic here, head of sales at Eightcap, and it goes quite quickly. It's start of another week. It's been a public holiday yesterday here in Melbourne, Victoria, in Australia. So obviously it's a short one, but nevertheless, actually quite a lot of news this week actually happening on the economic front. So markets have been to some extent subdued over the last couple of days. There hasn't been actually much movement, to be honest. But nevertheless, it looks like it will get quite busy later in the week. So how about we actually get started? The first point that I would like to go through this week is the economic calendar. So if you do have an Eightcap demo account or live account, you can access the client portal, and that will give you an access to the Acuity economic calendar, providing all the latest updates in terms of the economic front, news, and also the actual numbers as well. So how about we get started right now and see what's actually happening in the week ahead. Thursday our time, or Wednesday, I would say US time, it's an Fed interest rate decision. And if you have a look at it here, the market is actually anticipating no change. So previously sitting at 5.25% terminal rate, and the forecast is at 5.25% as well. In saying that, the chances of interest rate rise have to some extent been projected on the upwards, and it's around 27% chance of the 25 basis point rate rise coming out on Thursday morning or Wednesday night US time. If that happens, obviously likely to actually add further strength into the US dollar, and obviously highly likely the rest of the currencies, including commodities, potentially to come off. Also, that would mean that most likely 2-year and 10-year treasury bond market would actually go up as well. So that's probably a key headline for the week ahead. Also, just as important probably will be the FOMC press conference. So that's actually coming out as well. That will be important to listen to what Fed Jerome Powell, president, actually has to say about the inflation and also further interest rate rises coming up over the next few months. Very lastly, GDP out of New Zealand, and also unemployment rate coming out likely here in the AU for those of you that are trading Aussie. ECB as well, European Central Bank interest rate decision as well, and the market is also anticipating or cooking 25 basis point, factoring that already into the actual equation as well. So quite a bit of news this week, and it looks like we will get a little bit of the volatility coming into the weekend. So let's have a look at the charts. The first chart that I've got here is actually a volatility index. The reason why I've got here is it measures the actual volatility in terms of the market or the liquidity into the market. And as you can see, it's actually sitting around 18-month lows. So $17 level was actually a big support level. It has provided that in the past. If you have a look at back in March, what we can see is that volatility was spiked up quite heavily, and we saw a lot of erratic movements in the market. That was due to the obviously banking saga, banking issues earlier in the year, and also the regional banks as well as the Credit Suisse fallover. As you can see, that trend has been going downwards. It broke through $17 level. It's hitting at its lows at the moment, and what that indicates, the market is actually somewhat subdued. There's not much movement, and it's actually just on the low volumes right now. But last couple of days, we've seen an upside move at the moment. RSI 14 days actually saying that we might be oversold a little bit. And obviously, market is starting to bake in the next couple of days, big economic data. And hopefully, we get a little bit more volatility into the market, because I understand, and here at Eightcap as well, clients generally do tend to like volatility. So hopefully, this is going to help them out in terms of trading over the next few days. The chart that I would like to look at today specifically is gold. Gold is an interesting one at the moment. The reason why I've actually picked gold is considered as a generally a hedge against the risk in the market. And as we are seeing actually equities edge higher, both S&P, NASDAQ, equities are actually hitting all-time highs. Here locally, ASX as well, actually edging higher. It looks like it's a bit of a risk on at the moment. And as a result of that, bond market is been edging higher as well, and seems like a lot of flow is actually going into that as well because the yields are quite substantial. So because of all these reasons, what we're actually seeing at the moment is gold coming off, which is only natural, but it will be interesting whether it will continue that way over the next couple of days. So what I've got here is resistance level at $2,075 mark. And then I've got the next level of support around $1,913. The levels in blue are actually supply and demand levels. Basically, at these particular levels, what we can see is if the price was actually to drop, we will likely see a pickup in volume, and most likely we will see actually demand zones get filled in by the buyers. Okay, that's generally what the supply and demand zones indicate. And also what I've got is 50-day, 100-day, and 200-day exponential moving average. So that's actually the levels in yellow, green, and red. But one point that I want to actually raise with you, and what I find very interesting in gold charts at the moment, is the fact if you go from the all-time highs, and we have a look what is the pullback at the moment in the market, we can see it's actually dropped around 7%. So the most recent pullback from its highs to the actual current lows is around 7%. Now, if you do the exactly same principle based on the previous high back in February to the actual low, which is around back in March, we can also see they're very similar. So that one is 7.78%. And the most recent or the most current downtrend is around 7%. So it's actually in line with the recent pullback in terms of the market. So something to consider or something to think about as well. Now, what I will do is also apply the Fibonacci levels from the major lows. And if you have a look at the prior range, we can see the market actually pulled back between 38.2% and also 50%. And if I do exactly the same scenario on the current trend, or downtrend to the all-time high, what we can see is actually market is pulling back around the 38 to 50% zone as well. So it looks like the most current trend or downtrend from its actual peaks of $2,075 is pretty much a replica of what was actually happening from the highs back in February till the lows that were occurring on 27th of February. Now, I'm not saying the playbook will be exactly the same, but all I'm saying is that history doesn't repeat by rhymes. I'm sure you've heard that previously. Well, it might be a similar scenario here. Nevertheless, if the market was to pull back and continue going downwards, I would actually expect it potentially not to go any further than $1,915 level. Okay, that's a massive support level. It's a natural level, and it coincides nicely with 61.8% of the last major range of the Fibonacci as well. Let's also apply the trend line. And if we go from the major low back in November 2022, and we apply the most recent trend line, what we can see here is that upward trend line is actually valid because it's gone from the major trough back in 3rd of November. It's also brushed off here back in 9th of March. And also it's actually brushing off at the moment as well around 12th of June. So what that means to me is that uptrend line that's actually currently on the chart also provides a support level. So as long as gold can hover around these levels, and if it starts going upwards and creeping upwards, then we would most likely expect it to go towards that major all-time high resistance level. If it is to break that, then it's likely to actually continue the run and create new all-time highs. On the contrary, break below this downtrend line, break below 50% of the last major range in terms of the Fibonacci level, we would most likely see gold pull back around that support level. Now, nevertheless, one thing to consider as well is the macro fundamental news. It's important to note that we've got, as mentioned previously, consumer price index tonight, which is going to be an absolutely must watch if you're trading gold, because it's going to provide an indication on the interest rate decision on Thursday. If Fed was actually to lift another 25 basis points, it's highly likely it would be bearish for gold because the US strength would actually prevail. However, on the contrary, if we see no change, terminal rate in the US stays at 5.25%, then it could become actually a little bit more bullish for gold, and we might see gold bulls come in and basically, test the 1,980 level, that peak. And if it breaks above that, then we might see it start marching upwards. So gold is definitely one to watch as well. US dollar is one to watch as well. Bond markets, as always, something very important to watch. It looks like it will be a busy week on the economic front, and hopefully that volume and liquidity picks up as well, and we actually start getting some proper moves in the market. So that's it from me. I wish you all the best. Thank you so much. Give it a like on YouTube. Give me a follow up on my Twitter account as well. Looking forward to the week ahead, and hopefully it's going to be a great one for trading. Thank you guys. Enjoy the rest of your day. Take care.